All right, let's see if anybody can realize I'm here. I'm going to watch this for a couple of seconds here because obviously this is not normal. And yeah. Star Stylist is here. Yeah, well, there's a good reason why I'm here. I'm hoping some people get in here, Star, uh, because we got some serious stuff to talk about. And morning, guys. I'm trying to get some stuff in here. Hopefully, people see what's going on. Yeah, Star. Is you ain't kidding. All right, so I'll let you guys know real quick why I'm doing this. I just recorded a video with what's going on. Uh, we can't upload videos to YouTube. I don't have a strike or anything like that. It just sits there and does nothing. So having it's been sitting on uploading at 3% for the last 10 minutes, and this is important here. All right. So I'm going to probably tell you guys this a couple of times as people come in. Guys, we are having some serious issues today. I'm not trying to scare anybody, but I want to tell you what's going on with financially with this whole bank deal. All right. Right now, we are a half an hour from the market opening. Dow futures are down 222 points. It's nothing huge. If you take a look at what's going on around the world, okay, the FTSE, that's the London Stock Exchange, that's down about 2.25%. If you look at the DAX in Germany, that's down almost 2.5%. You look at the Japanese market, down 1.13%. That's one part of it. Okay. That's nothing. I mean, those are relatively normal fluctuations. Here's where the scary part comes in. Treasury yields, US government bonds, guys. 2-year bond yield is down 9.7% this morning. 5-year bond down 8.2. 10-year bond 6.45. 30-year bond down 3.87. That's as of right now. The pre-markets, you are having the bond markets are getting crushed. Well, the bond yields are getting crushed. The prices of the bonds obviously are going up. Uh, what you what we need to pay attention to, and this is what I was discussing earlier. Let me pull it back up here so I can get the current number. You guys, wrong one. Hang on. All right. So the first one I want to mention, this is where you got to watch what's going on with these banks. First Republic Bank, the one that we had talked about uh, on the live stream, the one I talked about briefly this morning, the one that you saw the lines of people lining up to get money out of the bank. Now, mind you, this First Republic Bank stock on Friday closed at $81.76. It was down 14 and a quarter on Friday, down 14.8%. So Friday morning, that stock opened up at $96. Okay. Right now, pre-market, it is expected to open up under 31. It is down 62.3% in the pre-market this morning. It's getting crushed. First Republic Bank probably will not exist within the next couple of days. The other one that I talked about this morning that wasn't on anybody's radar, okay? Nobody's mentioned it at all. Western Alliance Bancorp. This is for you guys in Phoenix, all right? Closed on Friday at 49.34. That was down 13 bucks or 21% on Friday. Means it opened up Friday morning at $62. Pre-market this morning, it's expected to open up at $15, down 34 bucks today or down 69%. We are beginning to see the failures of these banks, guys. This is what's going on. Charles Schwab got whacked for Uh, let me see if I can pull it up here real quick. Oops, I don't need that. Let's see. Hang on. CHW stock. All right. So this is where you start getting into brokerage firms, if you will. I mean, Schwab's got a bank. Uh, Schwab was down 11.5% on Friday. It's going into the market this morning down 10% in pre-market. We are going to see some banks get crushed. And you guys, I'm warning everybody so you know I'm going to say again what I've said over and over and over again. You need to have cash at home. Okay. It would be prudent to go get some cash today because we don't know what the next bank is. Like I said, nobody's talked about Western Alliance Bancorp at all. I brought it up this morning, and then of course I saw Zero Hedge picked up on that this morning too. That was it. But I haven't heard this anywhere. And of course, I get a kick out of the mainstream media. They're more worried about talking about the Oscars last night than what's going on with the banking industry, right? Because the Oscars is important stuff. The fact that you wake up one morning and you have no money, that might be a little bit more worrisome. But let's look at the flip side of this. All right. Again, gold and silver. Gold is up almost 2%, up 35 bucks an ounce this morning. Silver's actually pulled back a little bit. It's only up 97 cents or 4.75%. You guys know how I talk about SD bullion or JM bullion, or when you guys ask me where I buy my silver and stuff like that. Both of them came out this morning and said that they had record purchases over the weekend. Now, you got to remember this: the inventories for the bullion dealers have already been very low because they can't, it's not being mined as fast as it's being bought. Now you get the fact that on low inventory, people are buying it in a frenzy. It's going to be hard to get. Now you talk about supply and demand. What is that going to do? If there's no supply and there's high demand, there goes the price. How many months have we been talking about China, Russia, India, whatever, all these countries buying gold, buying gold, buying gold? Why? Because of exactly this. This is why they are doing it. When drops of water into a bucket, we're seeing the small banks now. You look at any of the big banks, the JP Morgans, the Citigroups, the Bank of Americas, what they're doing pre-market today. Down 2%, down 3%. Bank of America, biggest bank in the United States, they're down 5% in pre-market. This hasn't hit the big banks yet, okay? But this is the issue that we're getting into. I'm not trying to prophesize or anything here. Just be careful. Have your eyes and ears open wherever your bank is. News alerts, anything of the sort. Watch the stock price of your bank. If the stock price starts tanking like this, make a trip to the bank. If you have money in First Republic or if you have money in Western Alliance, shut off the video, go to the ATM machine. Okay. The market opens here in 15 minutes. This could be a Black Monday 2023. We're going to see what happens. But when things get bad, you have the domino effect, guys. Drops of water into a bucket, and eventually it's more full and more full and more full and more full. This is not a pretty situation right now. If you've got your gold and silver, good. If you've got cash in the house, good. If you've got cash in the bank, depending on your bank, just pay attention. Today's going to get bloody. And, if you're looking at where to put money safely, okay, Treasuries just got a hell of a lot more expensive to buy for less return. You're going to see CD rates go flip-flop all over the place after today. I mean, Mrs. P and I were doing some research last night and looking at bond rates and CD rates and things like that, fixed income type stuff. There's 1-year CDs out there that you can get that are around 5%, stuff like that. I'm betting by tomorrow morning, you're not going to see that. Uh, the pressure that this is going to put on the Fed, we've seen the Fed raising rates, raising rates, raising rates, raising rates because they want to get inflation under control. This is going to force the Fed to stop that and potentially start cutting rates to get business flowing again. Everything they've done to cool this economy or cool inflation, they've completely screwed the pooch. And as everybody said, they were between a rock and a hard place because of what they set up in the first place. They could either make a bad decision or a worse decision. That was it. There weren't any good decisions on what they could do. All these years of cheap money, cheap money, cheap money eventually had to come to an end. You knew it. I knew it. They knew it. And now it's time to pay the piper. You look at what happened with Silicon Valley Bank and Yellen doing the about face in 12 hours. We're not bailing anybody out. 12 hours later, we're bailing them out. You look at what that bailout package is. It's $25 billion. I want to remind everybody how much money we've sent to Ukraine. Okay. 8 times as much. Just saying. Okay. Remember, Silicon Valley Bank had over $200 billion in deposits that people are going to be made whole on. $200 billion deposits. We're going to bail them out with $25 billion. Anybody see a shortage here of $175 billion? It's actually 184, but yeah, we got a problem. And Wall Street is realizing this morning that 25 billion ain't enough. So what do we got to do? And they're running for the hills. So I wanted to let you guys know this. Like I said, I tried putting a video up that I had recorded. If you're not seeing anybody putting up videos, there's something frozen, and I don't know why. That's why I decided to go live, just to get this in front of you guys. But I made my case on Bank of America. I made my case on Wells Fargo the other day. I told you I wouldn't have money. I wouldn't have money with them at all. Okay. Now you start looking, and I obviously can't tell you every regional bank in the country. I probably can't tell you every regional bank in Tennessee. I know I can't. But find out what's going on, guys. This is why we prep. This is why we do everything. And I know people say all the time, you can't eat gold and silver. You can't eat gold and silver. I get it. Okay. I've said a million times, you get your food, you get your water, you get your shelter taken care of before you worry about gold and silver. But I'm going to tell you something else. You can't pay your electric bill with beans and rice. Just telling you. All right. You got to have some sort of money. And we're going to find out real quick how long the dollar lasts. This could really, I'm going to throw something out. Somebody could say, oh, it's a conspiracy theory. I'm just going to plant a thought in your head just to see if you guys want to look into this too. Anytime you want to do something big, you don't go to the biggest thing right at the end. The old saying, how do you eat an elephant? One bite at a time. Okay. You don't try to swallow the whole thing, right? Okay. You guys get what I'm saying? If the government wants to get us to CBDC, which we know they do, and the banks don't want CBDC at all, because the banks know they're out of business if CBDC comes along. What would be the most prudent way to do it? Start small, bite off a couple of regional banks. The government's not going to go in and go, hey, cool, you know what? It's Monday morning. Let's see if we can screw JP Morgan, Citibank, Bank of America, and Wells Fargo today. You don't eat the whole elephant at one time. They're going to take a bite. All right, let's take a bite out of this bank. Let's take a bite out of this bank. Let's take a bite out of this bank. We've lost 3 banks in 3 days. Okay. And two more, right, that I just showed you look like they are on the verge of going out of business. Okay, that the companies are going to go bankrupt. This is highly, highly, highly concerning, guys. Please watch what's going on. You know, like I said, if for those of you guys that came in late, I'm just going to give you the quick rundown real quick. First Republic Bank, the one we were talking about over the weekend, that there were all the lines. Pre-market that is expected to be down right now 63.5%, a drop of $52 a share. That's going from $96 a share now to $29.70. So you can imagine you've lost nearly $70 a share if you own that from Friday morning to Monday morning. The other one I talked about this morning, Western Alliance. Let me pull that one back up here again. Western Alliance is one I'd really keep my eye on. Nobody's talking about it. Western Alliance opened up Friday morning at $62 and change. It is now indicating this morning to open up under $15. It is down 70% in the pre-market this morning, and the market opens 10 minutes from now. Okay. If we go back to the bond yields, and like I said, I'll repeat this a couple of times for those who come in late. 2-year Treasury yield is down 8.7% this morning. 5-year is down 6.55. 10-year is down 5.5, and 30-year is down 3.4. Bond yields are getting crushed. That is not going to be good. This is basically telling everybody that the Fed raising rates over and over and over again is inevitably going to stop, and they're going to have to do a complete about face and go into potentially, if not doing nothing, leaving rates alone, but they're going to potentially have to cut rates. They raised too much too fast, and did everything they could to screw the markets. Screw the bond markets. I mean, they've screwed the capital markets around the world. I mean, as I put it earlier, today has the potential to be Black Monday 2023. We haven't seen a day, a Black Thursday or whatever it would be since 1987. You can call whatever happened after 9/11. I remember those days. I was a broker on 9/11. You can imagine what that was like. That was freaking out. Nobody jumping out of windows, but that was freaking out. You're going to have a lot of financial professionals freaking out today. If you're trying to get a hold of your broker, your CFA, whatever it would be, good freaking luck today, because they got phones in both ears trying to figure out what's going on. Guys, just pay attention. Do what you know is right for you, but please protect yourself financially, because today could be the first day of the collapse. And maybe this only lasts a couple of days. Maybe this gets worse and worse and worse. But this is why we prep. This is why we talk on these videos all the time. We do these live streams. It's so we can learn, so we can know. Because right now, every one of us is 100-fold better than all the people on Main Street who are running around with their hair on fire going, "Oh my God, oh my God, oh my God, what's going to happen? What's going to happen? What's going to happen?" We've had the time and the foresight to be aware of what's going on and to prepare for this exact situation, because we saw it coming and didn't run around like this with our eyes closed going, "The economy's good. I think Joe's doing a great job." Okay. Joe will go down in history as the biggest disaster in the White House ever. And he's only been in for 2 years. Do what you can, prep what you can. If you can get gold and silver right now, let's even take a look where it's moving right now. Yeah, silver's up at 21.58, up $1.07, 5.25%. Gold is over $1,900, 1905. I don't know if I'd be buying gold here. I wouldn't be turning it down. Let's put this, if I had a choice between buying gold and buying silver right now, I'd be dumping money into silver left and right. Uh, that would be the way to go. All right, I'm going to try to take some questions here if I can. And I'm sorry for a morning live stream, guys. It might actually turn out to be a better idea. Uh, Here, let's see. Mary Ann says, "What do we do with 401ks, please?" Okay. I've said many times, if you're worried about the volatility in the market, move your 401k from, if you got large cap growth stocks or small cap value or whatever it is, move it into cash. Okay. At this point, I cannot tell you to move it into your bond fund. If you are risk averse at this point, move your 401k into the money market option you have. Okay. That that's it. I can't say go after the fixed income portfolio with what's going on right now in the treasury market. And I mean, me, I've been leery of being in the equity market for 2 years. That's why I bailed. Uh, Again, this is not financial advice. You have to figure that out on your own. If it was my money and I had money in a 401k right now, it would all be sitting in cash. I'm not playing these rides. Could you possibly miss some upside? Yes, but you got a risk reward. You got to look at, okay, how much am I willing to risk losing for how much am I willing to making? And the risk right now is a hell of a lot higher than the reward. That's what the volatility index is, the VIX as it's called. You hear me talk about every once in a while. The VIX index right now today, again, market that doesn't open for 6 minutes. The VIX is up 20% this morning. That's how much more risk you are taking in the market today than you were on Friday. Does anybody want to take 20% more risk today than they did yesterday? No. Okay. Uh, Again, like I said, not financial advice. If it was my money, I'd be putting it in cash. Okay. I'm trying to do this. Is obviously I'm not set up for doing this, so I'm trying to look at what I can. Michelle M says, "How will this affect credit unions?" Credit unions are close to the same. It depends on the credit union. You got to remember, credit unions are owned by the members. Okay, they're not publicly traded. They're not owned. They're not on the stock market or anything like that. They're privately held by all the members. In that respect, there's maybe a little bit more safety, but the credit unions are there to make money too. So they are investing money in treasury bonds or whatever. Treasuries are usually what you see as your safe haven. That's where you want to go. Look what happened. Silicon Valley Bank thought it was their safe haven and they got their ass handed to them. Okay. Now the rest of the market, you're seeing, again, you got to understand the inverse relationship between yield and the price of bond. I've explained it a couple of times how you guys go, but like I said, if you take anything, buy a bond, $1,000 bond that pays a 5% coupon. Okay. The bond price is going to go as the bond goes up, the yield goes down. It's still a 5% coupon, but now you've got to pay $102 or $1,020 to get that 5% coupon, which means your yield is now 4.9% or whatever it is. Well, as the yield keeps going down, that means the price keeps going up. All right. So it's getting more expensive to buy bonds to get that return that you're looking for. So you're getting less of a yield. That I know that one's a concept. Some people get it like that. Other people it's hard. Okay. But yeah, I would not, if it was my money, it'd be in cash. And credit union. Well, okay, we're on the credit union part. So the deal with credit unions is they're in the business to make money as well. I mean, those buildings weren't built for free. The tellers don't work for nothing, everything like that. The electric bill still got to get paid. They got to make money somewhere too. And, you're not depositing your money in a credit union, nor are you depositing it in a bank, and they're just putting all that cash back in the vault in the back. They're investing it in, uh, overnight money or T-bills, T-bonds, whatever would be. They've got it put somewhere, so they're getting some sort of income on it. There's a reason why credit cards charge you 20% interest, but your savings account only pays you 0.1. That spread right there. They're taking the money that you gave them, using it for the credit card, and they're making the profit in between. So, Brenda Mackey, what about our banks in Canada? I can't say anything about Canada. Let me just take a look and see what RBC is doing. At least I know that one. We got RBC. Well, you can take a look at. Let's see. Royal Bank of Canada is down 1.68% on the pre-market. What's Old Dominion doing? The hell do I know Canadian banks? All right, not even seeing that. I could look at TD. That's more in the United States, even though it's based out of Canada. Let's take a look at that. Yeah, Toronto Dominion Bank TD down 1.42. So yeah, the banks in Canada are feeling this just like the banks in the U.S. are. But again, I don't know the Canadian regulatory rules or their equivalent to the SEC or anything like that. So, but Canada is going to fall right in line with the U.S. You guys can expect the same thing, I would say. Samantha, how can this affect a home land purchase? Should I wait? It's going to get, if interest rates come down in that respect, you'd be okay. That part could help. The thing is, the banks may get a lot tighter on issuing credit with all of this too. So, if you're one of those people and that, gee, I've got a 680 credit score, 690, I'm right on the cusp of whether they're going to finance me or something like that, the banks probably will raise the requirements for getting a loan. So, but chances are this will drop rates if you're looking at doing a finance. As for buying it outright, it's not going to make a lick of difference at all. This could cause, hang on a second. See, I'm doing this on my computer, so my phone rings. Go figure. If you're buying it outright, it's not going to cause a problem. However, this could cause a big series of drastic drops in the value of real estate. I will say that, because if people can't buy it, again, you're talking about supply and demand, whole 9 years there. Jeff, thank you for the super chat. Advice on situation with TVA. Got everything good. I'm glad you did. Okay. I'm glad you got that straightened out. Just happy. It's like, thank God. Country Humans Network, what type of bank should I be concerned of? Like US Bank, I can't stand US Bank. They're another one that falls right up there with Wells Fargo, just being crooked as crazy. Associated Bank, I've never had any dealings with them, so I don't know. But right now, I'd be focused on whatever bank you are doing business with, watching what's going on with their stock price, listening to any news that comes out, especially if there are any press releases that come out of the companies. You want to focus on that right now to make sure your money's safe. Susan Musser, I have to go to the store today. Should I take cash back too? Absolutely. Like I said, my rule of thumb, guys, agree with me or disagree with me. 6 months worth of cash, 6 months worth of bills of cash in the house. Okay. And like I said in one of the videos recently, I understand if your bills are $2,000, that's $12,000 in cash in the house. Yeah, I get it. Okay. But Imagine that your mortgage payment is due in what, 18 days, and your bank closes. Remember what they said originally about Silicon Valley Bank, that people have access to 50% of their money today, and it was going to be 3 to 6 months till they get the other half of their money. You tell me how your budget works, how everything. If right now you got cut from 50% of everything, 50% of everything you had in the bank today was you couldn't touch for 6 months. How does that handle? How does that help your household budget? Are you going to stress about paying bills, putting food on the table? If you got the cash in the house, you know you got it covered. Okay, that's that's what I'm saying. Uh, Hang on, we shot to the bottom. I'm trying. What about savings bonds? Savings bonds are you're not going to buy them. You're not going to. There's really no trading market for savings bonds, so they don't fluctuate. So you're fine there, Judy. Just you're going to hold those till maturity anyway. Uh, Alpha Haas, what would be a comfortable amount of silver and cash to have on hand? Cash, like I said, 6 months worth of your bills. Silver, it used to be 5 to 10% of your uh, liquid assets. I'd now say 20% would be a better rate, and depend 20%. If you've got $100,000 in cash and cash equivalent, 20 grand worth of silver. Okay, silver or gold. Okay, precious metals. Depending on what happens this week, that may go up. All right, but 20% of your liquid assets, in my opinion, should be in precious metals. Robert says 3 people in a bank, no issues here, pulling more funds. Okay. Just protecting yourself. Good. Fat Daddy's Outdoor Cooking. What is your last run to town list? Don't understand the question. Okay. Ildeco, thank you for the super chat. It's nice to be together for the wrong reason. Yeah. Have I ever done a surprise live stream? I don't think so. Lorna, do not promote crypto in chat. Pinball hates it. You can promote crypto all you want. I'm just going to tell you, a fool and his money are soon parted. And I think over the last 18 months, I've been proven correct. So, what is it? 90% of the people who've invested in crypto have lost money. And I love all these people. I got in when it was 7 cents. Right. And if you didn't get out when it was 67,000, you're a freaking idiot, because you didn't hold it that long. It went from 7 cents to $12 and you sold at that point. Nobody ever buys the bottom and sells the top. It doesn't work that way. There's all sorts of people that'll claim, I got rich off of crypto. Maybe you did. If you bought it at 7 cents and sold at 12, yeah, you got rich off of crypto. But you didn't buy it at 7 and still own it at 60,000. Don't even try to lie to me like that. People don't do that. Jordan's Family Farm, thank you so much for talking about this. It's important for me to talk about it because this is a lot of my background. And I mean, sure, I'm a prepper. We talk about prepper channel, but finance is my background. And so I understand this, and I try to explain it as best I can to non-financial people. Let's put it that way. So, the average Joe on the street can understand what I'm talking about. I know sometimes I get a little wonky on it, but if it's freaking me out, knowing what goes on, I can't imagine how somebody would get smacked upside the head when they don't understand how this works and they still have to deal with the repercussions. So I try to do what I can to explain it. That's all. That's my intention here. Who's your daddy? Indiana Jones. Any news on Bank of America? Just like I said, it's down about 5% pre-market. I don't know if that's changed. Let's see. I can look, see if there's anything new on it. Now it's down 6.5% pre-market. See if there's any. Yeah, no news on it. It's just you're having a bank sell-off right now. That's what people see. This is the thing. You're going to have like I said earlier in here, for those of you guys that weren't here at the beginning, it's a domino effect. One bank starts going, the next one starts going. Two collapse, three collapse. Everybody starts worrying about four and five. Is my bank next? And so they start pulling money out and pulling money out. And the banks need that capital. If they don't have that capital, all of a sudden they get margin calls, if you will. They got to pay their bills. Where are they going to get the money? So then they start freaking out and selling other things. It's a snowball effect, and that's what we may run into this morning. Uh, see what the market's doing right now. All right, so Dow's down 182, S&P's down 50. So it's the market's not getting crushed, uh, which is understandable. Schwab is down 12% on the open there. Uh, Treasuries are holding where I talked about before. Silver is still climbing up $1.17. Gold is now up over $40 an ounce, $41 an ounce. So people are still flight to quality is still coming on. DH, I saw there was a headline. Potato just gave a 5-minute speech, says everything's okay. Sure. And the economy's good and inflation is low, and and he's got everything under control in Ukraine too, right? If everything's okay, why have I just given you two bank stocks that are down 60 some odd percent? Okay. Western Alliance Bancorp open less than $12 a share, down 76% this morning. And what was the other one? Regions Bank. No, it's not RBC. Why do I keep doing that? Keep forgetting the ticker symbol for it. Okay. Oops. Nope. It's not Regions Financial. It's Regions Bank. It's RFC, right? RBC. See. Yep. Losing my freaking mind. All right. Either way, things are getting crushed. Lorna, I don't care if somebody mentions cryptocurrency. That's fine. They can talk about it all they want. Just don't be trying to convince people to buy it. I mean, buying crypto is idiotic. But I don't care if they mention it. That's fine. To each his own. But Robbie Bobby, my 2 cents on military credit unions, Navy Fed, front wave credit unions are a skosh better than banks, if you will, for safety. But the downside to a credit union is they don't have the same reporting standards that a public company does. Credit union has to report to their shareholders, but they don't come out and report to the public like a bank, publicly traded bank does. They've got to make their annual, their financial statements available to the public. There's little nuances, but basically you're playing in the same pool. Okay. There's just as much risk with the military credit union as there is with a teacher's credit union, or whatever would be. Doesn't make a difference. Peggy Turchloose, are CDs safe? Yes, because they are insured. Okay, but now you're going to take. There's no certainty safe. Okay, you can take a look, and I was explaining this to Mrs. P last night. The difference between treasuries and CDs. CDs are backed by FDIC insurance. Great. Okay. Problem is FDIC's got $1.70 for every $100. Okay. So that's not great. Treasuries are backed by the full faith and government of the United States. How many people have faith in the government of the United States? So there's nothing that's risk free even if it's, oh, it's AAA insured, whatever it is, it doesn't mean you still can't lose. It's got less risk, but there is no such thing as no risk. Trucker Jim, good morning. Just getting up to this. Hey, there you go. Have a cup of coffee. God knows I need one. All right. Gene Debs, thank you. My husband told me the same thing last night about our bank. Yep, same thing. Okay, we answered that. C. Ramsey, who would I need to see to get my 401k transferred to tangible gold? You can't do it. If you still work for the company, you can't do anything with your 401k. Your investment options or whatever the 401k provider gives you, that's it. Those were decided on by your company. So you can't transfer it. If you don't work for the company, then what you need to do is do a rollover of your 401k to an IRA, and you can do a gold IRA, but again, you still can't hold it physically. So transferring it to tangible gold is not possible. The best you could do is, if you don't work for the company, you could roll it over into a gold and silver IRA, but you're still holding paper gold and silver. Okay. People keep asking credit unions. Yes, they're insured. They're no safer than banks. They're all playing in the same pool. Okay. It's just different reporting. There's different transparency with credit unions. That's it. Personally, I prefer a credit union over a bank, but there's downside. There's pros and cons to both. Let's put it that way. Mary Ann, so withdraw it into cash, not even park it with the broker company I have. I have to apologize. Okay. No, I'm not. All right. I'm assuming you're going back to your investment accounts. Guys, I'm going to have to go in a minute. Dog's begging to go outside. Transfer into cash is put it in the money market account in the brokerage firm or whatever that you have. Okay. Not greenbacks or whatever in your wallets. That's not what I'm saying. Putting it in cash is your basically like the savings account, the totally liquid assets, money market, the stuff that's just overnight funds. That would be what's going on. So, all right, I'm gonna boogie, guys. Go deal with the dog that's got to poop. Pay attention. I'll keep my eyes on this. If anything gets really crazy, I'll be back. I don't know if it'll wind up being this way again or it'll be a video, because YouTube is all messed up. And who knows if that's the beginning to shutting down communications for everybody. I don't know. But all I know is I couldn't get a video uploaded. We'll see y'all later. Have a good one. Pinball out.